half. 2 others got hurt.
Well, if you're looking to save some money on your 2006 taxes, maybe you could make a real quick move. Tax experts at the IRS say selling a home can lead to tax-free money. You can also deduct the cost of moving at least 50 miles. And there is still time to save on your taxes in other ways, maybe more practical. Retirement expert Burk Rosenthal joining us live from our Dallas newsroom. Good morning.
Hi there.
So let's say that we don't have an impending sale and move in our final few days of '06. What are some of the best ways to reduce taxes?
Well, an easy place to start is don't forget about those charitable contributions. We've got a few days left to make a contribution to charity and deduct that on the 2006 tax return. And keep in mind, if you've got contributions you plan to make in early 2007, you could actually make those now and take that deduction this year as opposed to next year. Another easy way to save some taxes is to consider making a contribution to a tax-deductible IRA. Those rules have been loosened in the last few years, and a lot of folks can put more money now than they once could, and the likelihood of deducting that contribution is higher than it once was. Also, you've got until April 15th for that one, so we've got a little bit of time to take advantage of that.
Mr. Rosenthal, what about our property tax bill? Technically, it is not due until the last day of January. But let's say you go ahead and pay it in the month of December. Does that help out?
It does, definitely. You can accelerate that, take that deduction this year by paying it before the end of the year, definitely. Another area, make your mortgage payment for January. Make that now. That way you can apply that interest to your 2006 tax return as opposed to your 2007 tax return. Now, keep in mind, if you take advantage of that strategy, you can't take that deduction again next year. You can only take it one time, of course.
Are there any major changes from '05 to '06? What jumps out for us?
Well, there's a new rule that if you're 70 and a half or older, you can take a distribution from your IRA up to $100,000 and make that distribution payable directly to a qualified charity, and it's a tax-free event. You don't even have to itemize to take advantage of that new rule. It's going to be in place this year and next year.
Well, Burk Rosenthal, thanks for your time this morning, and Happy New Year.
Thank you for having me.
All right, 6:22 for you now. Let's head over to Greg and get a look at that forecast for your weekend.